Hey folks, it is January 7th of 2026, and as you know, we're only a few days into the year and already feels like there's so much going on. Like the world is going upside down. Just a few days into the year and there's so many political, so many economical, and so many issues going on that it feels like it's been months instead of days. So, if you're watching this for the first time, welcome. My name is Julián Gonzalez. I'm one of the managing partners here at Upfront CPA, and it's a pleasure for me to be talking to you today. I know there's a lot of changes. I know there's a lot of things going on. If you feel like you wake up one day and it's like you wake up to a whole new world, like don't be ashamed. Don't feel alone, because it's definitely something that is affecting a lot of people. But I want to start on a good note. Today I want to talk about one of the first things that it's come to our attention in this time of year. Like January, it's now officially the beginning of the 2026 tax season, and I wanted to do like a first introduction into the year and hit the ground running. I wanted to share some information with you so that you can improve, so that you can do things better, and hopefully save on taxes and save on headaches, and do things the right way. So one of the most important topics that I get to talk to my clients around this time of the year particularly is the entity election. And although how you choose whatever corporate entity works for you, it's more of a high level decision. It's something that you should sit down with your accountant, your CPA, to discuss before you even start the business. There's so many things to consider, but it's something you want to kind of get started the right way. Why it's particularly important in January is because it right now is the time to make the election. Okay, and what that means is we have what is called a calendar year. So most taxpayers we use the whole calendar year. So when the 265-day count, what that means is you can use a fiscal year where it's from October to November, or from some other date. But the calendar year is that January 1st through December 31st. So if you're like most taxpayers, right now is the time to elect or to deselect or to make changes to the whatever election that you may have either begin with or that you may have chosen in the past, and it makes sense to make some changes. So this is one of the most important decisions that you're gonna make for your entity. Right now, like as I mentioned, right now is the time. There are deadlines to consider. There are consequences to making the move now, to waiting for later, to have done it in the past. This is the time to get it right. So I'm gonna walk you through in this video really what this election means, what that might mean for you. So I'm gonna give you some high level information just so you have an idea, but I highly recommend that you contact your CPA or your attorney and you kind of walk him through kind of like some of the different options that I'm gonna give you. And if this applies to you, feel free to contact us or write on the comments below. If you have some questions, we'll be more than happy to help you and assist you in this matter. So I want to start with the simple question, the most basic, right? Which is entity versus tax election. These are two different things. Okay, this is the most important, the most common misconception, right? Which is, can I open up an S-Corp? That doesn't exist. Okay, there's a difference between the entity that you open and the tax election that you choose. So the entity is a state. It's a state transaction. It's a state entity. That means you open up an LLC. You're opening up a corporation. You're doing that with the state. You can open up an LLC or a company or an entity in whatever state. You can open them in Florida, in Delaware, in Wyoming, in Texas, whatever might work for you. Okay, there's obviously implications as to where you want to open them. You can't, unless, depending on the type of business that you have, you may need to open it up in a certain location. But generally, you can choose where you open up the entity, and generally you can also apply. Let's say you open in an LLC in a different state, you can apply to use that same entity on another state. Something else you can do, but those are more in detail discussions that you want to have with your CPA depending on your particular situation. But the point is, the LLC, the company, is an entity with the state. Okay. When it comes to the election of how it's going to be taxed at the federal level, that's when you make the decision. That's when you make the election. That's when we talk about whether it's an S-Corp. There's three options. You're either an S-Corp, and we're talking about the corporate level here. We're not talking about individual taxes. This whole video today, we're talking about strictly corporate. So there is S-Corp, there's C-Corp, and there's disregarded for taxes. Okay? So LLC, it's a legal structure, it's a company, it's a state entity. An S-Corp, C-Corp, or disregarded for taxes is the tax election. Generally, you do not include the disregarded for taxes because that's not an election that you're making. That's usually something that it falls under as you opening up the LLC. But for purposes of this discussion, we're going to include the disregarded for taxes as part of this conversation. So, why is this is important in January? So today I want to talk about the deadlines, right? Which is very, very the key to what we're talking about today is the deadlines. And why is it important is because we know that with the IRS, once you miss deadlines, it's not the end of the world. There are other alternatives that you can choose, but as you start piling up these things, they can become more costly, they can become more headache, they can open up yourself up for more scrutiny, for an audit, any number of things that could happen. So it's important that if you're gonna miss a deadline, or if you're kind of tight up in time, that is for a reason. And then if you're gonna go back and do something late, that is done first for the right reasons, obviously, and then number two, that is done correctly. So this is January specifically. This is why it's so important to kind of take a look at this right now. If you're unsure of what the entity you should have for your company, if you heard that most people think that an S-Corp applies to everybody, so I think it's why this video it's gonna be important for you. So let's dig into the deadline. So let's start with the S-Corps. Okay, so when you elect to be an S-Corp, generally something you have to do to become an S-Corp is not something that happens naturally, meaning you don't open up an LLC that automatically becomes an S-Corp. You have to elect to be an S-Corp, and that is done through a form called IRS Form 2553. Okay, this is the form that you're gonna fill with the IRS. It's a pretty simple form, but you have to fill it up correctly. You have to put your signature, you have to put the members. It has to be done correctly. Okay, usually that's done by March 15th. Okay, that's our first date, our first important date. If you have an existing business, you're opening up a business, usually during the beginning of the year, March 15th is your deadline. Or the other option is within 75 days of formation for the new business. Okay, so just remember, as soon as you open the LLC, if you choose to be an S-Corp, you have 75 days. Now, this is kind of a tricky situation because rarely the case where when you open up the LLC, you choose to be an S-Corp. That is rare. Most cases, once you open up the LLC, I'm kind of getting ahead of myself it's for this disregarded entity, but let's just leave it at it's not always a good idea to be an S-Corp, especially if you're opening up the LLC right away. I'll get into more details as we go. So if you miss the deadline, this is important. If you miss the deadline, you may lose an entirely year of savings. So if you miss it for this year, doing it this year, then you lose the prior year's election where if you did it, then you would get all the benefits of being an S-Corp. For whatever the reason that you choose to be an S-Corp, whether that's because you're choosing to do payroll, because you want to take advantage of the payroll distribution exception. Whether that's the case, if you don't do it on time, you're gonna miss that whole benefit that you could get for being an S-Corp. So make sure you do it on time, okay? So the next one is the C corporation election, okay? This is filed through a form A832, okay? Similar like the 2553, this is a sort of a simple form. You just kind of have to go through the details. But again, the devil's in the details. Make sure you do it correctly. You have to make sure that you put correctly the entity that you're moving out of and then into. So, there are very specific informations that you have to follow to make sure you do it right. So it generally, follows the same rules as an S-Corp, just kind of like, just going through the details. One key with a C-Corp is changes are limited to 5 years. So if you choose to be a C-Corp, make sure that this is a decision that it comes with basis and that you are doing it correctly for the right reasons, because it's very limited what you can do after. Okay, so we have the S-Corp, right, which is a pass-through entity. Okay, and if you're kind of still struggling with the difference between a pass-through entity, which is the S-Corp, and the 1065, I have a whole video about it. You can go back and see it, or you can just shoot us an email, write on the comments. We can even do a whole. We can talk to you through a consultation and just walk you through the difference. But we have the S-Corp, we have the C-Corp. Okay, so what is the C-Corp? What's the difference? The C-Corp, it's an actual corporation. So that's when it's no longer a pass-through. Where an S-Corp, everything is passed through the individual. At the C-Corp, it's a completely different entity. Okay, and this is when you choose to be that separate entity. Similar to the S-Corp, you don't choose to open up a C-Corp. You can open up an LLC and then elect that LLC to be taxed as a C-Corp. I hope that's clear, because it's very important, okay? It is not a casual decision, especially if you plan to grow your business. As you start to grow your business, whether you're gonna be an S-Corp and a C-Corp, it's very, very important. And then we get the third, which is the disregarded entity, which is the default choice when you open up a single member LLC. This is when I spoke earlier about you don't choose to be a disregarded entity. Usually that's defaulted into. And in this case, if you open up a new LLC where you're a single member, you are defaulted. By default, you are a disregarded entity. So what does that mean? Does that mean that my entity doesn't exist? No. What that means is, for all the purposes of being a company, an LLC, whatever, for the whatever business reason you may have to have your company, it works. It's perfect. You can do whatever you intend to do with that company for the business that you're choosing to do. What it means is it's disregarded in terms of how you file your taxes. When it's disregarded, it goes on your personal taxes. It's sort of like a sole proprietorship. Usually it's kind of like what it's kind of tied to, and there's no separation. Okay, your company is you. Okay, it's usually appropriate at the beginning, right? But as you start growing your business, it starts becoming more and more inefficient. And we'll talk a little bit about more why there's some inefficiencies as being a disregarded entity. So, since we are on the area of disregarded entity, let's get into more of the specifics of each one. Like when is it a new a disregarded entity? When is it an S-Corp? When is it a C-Corp? So let's go upside down. Now we started with the S-Corp. Now let's start with the disregarded entity. So who is a disregarded entity for? Who is it meant? Who does it benefit? Who does it benefit? Who is it actually for? So and by the way, this does not apply to everyone. This is generally the case. But in most cases, if you're a new business, if you have inconsistent income, if you are a sole owner, sole operator, and if you are sort of like, let's say, testing the waters, testing a concept, generally a disregarded entity is the best for you. Why? Since there is no separation, and since you are not electing to be either an S-Corp or a C-Corp, which would actually require its own tax forms, which would actually require for you to follow certain guidelines for you to stay within that election, the disregarded entity is the best for in those terms. Okay? It's very simple. It's simple to open. You don't, like I said, you don't have to file any of the 2 forms I mentioned earlier. You don't have to separate the entities. You don't have to do other tax forms. So in this case, disregarded entity is the best. It's all income is subject to income tax, obviously at the individual bracket. Okay, there are certain qualifications, certain things that you could do in terms of qualified business, certain credits that you could get, but normally everything just falls under your personal bracket. Okay, and one thing that is important, that it's also sort of a benefit of being an S-Corp, which is why you always hear the accountants or people on TikTok or in all the social media talking about opening up an S-Corp because of the self-employment tax. So, that is right. So when you have a disregarded entity, you have to pay what is called the self-employment tax, which is somewhere around 15%. That you have to pay for all you're basically financing all the FICA, FISA, all the unemployment, everything that under an S-Corp, you get to kind of split it between a corporate expense and your own expense. So that's another benefit of being an S-Corp. So, this simplicity works when you're starting new things, but as profits increase, obviously, there may require some changes there. Okay, so we're done with the disregarded entity. So we're now jumping into the famous S-Corp. Okay, usually when I go into my social media, YouTube, the vast majority of tax preparation professionals or any video about taxes, usually the vast majority, they all talk about S-Corps and S-Corp, S-Corp, S-Corp this, S-Corp that. So generally it's true that S-Corps have a lot of benefits, but it has to be clear here that the S-Corp does not apply to everyone. You have to fill certain criteria, or you should be under certain criteria for it to work for you. You could totally be in a position where you're elected to be an S-Corp without needing to. You're actually paying more because you're doing more forms that you don't need to. You're actually not within the requirements to be an S-Corp, so it might come with additional problems later. So it's definitely not a silver bullet. It's not a fit for all type of situation. So who does it truly fit for? So number one is it's usually consistent profits. Why? Why you want consistent profits? Because one of the things you're gonna do if you have an S-Corp, you should do payroll. Because one of the requirements to be an S-Corp is you gotta do reasonable compensation, and some of that is a split between payroll and distribution. So in order for you to do that, there needs to be consistent income. And so it's difficult to set up, let's say, a payroll plan or a distribution plan where you don't know how much income you're gonna get. Now, I know that there are some industries where income is, although there is some inconsistent, you can know that, for example, for a quarter, for half a year, for let's say for a period of 4 months or 5 months, it's inconsistent. Not that you're not gonna get it, it's just inconsistent in the form, meaning you may get some at the beginning of the year more than you get the first half, or you may get more in the third half than you get in the first half. So there's some nuances there where you can still have payroll, you can still be an S-Corp, although it's not completely consistent. So take that word inconsistency with a grain of salt, because you could be in an area where you're somewhat inconsistent, but being an S-Corp might work for you. You should be an owner actively working in the business, right? It's one of the things why you want, if you're running up some kind of company where you're not operating in the business, usually an S-Corp might not be the best option for you. So you should be part of the company, and it's usually works best when it's a service-based business. Okay, that's your professionals, that's your lawyers, your accountants. If you're providing some kind of services more than if you're selling goods and goods, or if you have inventory, stuff like that, then the S-Corp might not be the best. And I say might because there are circumstances where it could work, but generally it's mostly for services. Okay, so we talked about one of the things why it works. What you need salary, right? You need a reasonable salary. Okay, you need so that's when you do the whole payroll tax that I mentioned earlier. You do half the company, you have paid it yourself. The part that comes out of the company, it's a deduction. It's an expense that you're actually going to expense in the book, so it's going to reduce the net income. Works great. And then what happens with the remaining profit? The remaining profit, you distribute it. It's generally a distribution that you could do, and then there is no extra tax. There's no self-employment tax to that, so that's a great benefit. There is clearly it's an art, not a science, when it comes to that split. Okay, you gotta run some numbers before you just say out of the blue. Let's say I want to do a 60-40 or a 50-50 or a 70-30. It's not a number that is going to apply to everybody. You got to run your numbers to figure out which split, and by the split I mean the split between payroll and distribution. Okay, because payroll is going to pay all that all that employment tax and all that, which is going to be deducted out of the company, and then there's the distribution part, which is it has no self-employment tax. So there's an art there that you got to play with, and that you have to know your numbers and run some scenarios to make sure you get that you get the one that works for you. Who wants to avoid an S-Corp? And please listen to this one. Who wants to avoid an S-Corp? First of all, no payroll. If you have no payroll, you should not be doing an S-Corp. Okay? Unreasonable salary. So, I mean, this one is a little bit tricky because, reasonable can be a very subjective word that might mean something different to who you're speaking to. But let's stay within the reason of reasonability. If you don't have that, then you should not be an S-Corp. Poor bookkeeping. If you're commingling funds, if you are treating your business like a personal, you're paying everything out of a personal, you have no guidance, you have no separation between your personal and your business, you should not be an S-Corp. Okay? No annual review. So if you have no annual review, if you're not keeping consistency within how your books work, if you're not having, even set up maybe something like board meetings, if you're not treating your business seriously, you should not be an S-Corp. And just a quick little detail: an S-Corp is the most audited election when it's abused. Okay, so there are certain red flags that the IRS can kind of pick on to trigger audits. So so it's very effective when it's done right. But if it's done incorrectly, it could set you up to be a target to the IRS, something that you definitely do not want to be. So the next one is the C-Corp. Okay, this is the corporation. This is when we separate the fund, where it's a completely different entity. Whereas an S-Corp, there's some pass-throughs. When I mentioned the distribution and the K1 that you get so the net income in the S-Corp actually gets reported in your personal taxes with the K1, right? That's what is called a pass-through. In the C corporation, there's none of that. It's basically its own entity that does its own taxes separate from the individuals. Okay. So when does a C-Corp, when would a C-Corp work for me? Okay. So it makes sense in these following scenarios. First of all, reinvesting profits. So if you're looking to have some retained earnings that you want to keep doing into your own business, usually a C-Corp is the best one for you. If you're looking to scale, if you're looking to grow your business to let's say a Fortune 500 one day, let's say you want to sell shares, let's say you want to have that level of, don't want to say profession, so you want to have that level of ambition into your company, usually that C-Corp works for you. Another big one is seeking investors. If you're seeking someone to invest into your company where you don't want them to be manager, where you don't want them to be just some random person into the company that you gotta bring in, where you can sell shares, where you can separate the person from the operations of the business, a C-Corp will be the best one for you. And then there's usually C-Corps also, they're usually good as they become part of certain structures, right? I'm sure you heard about holding companies. I'm sure you've heard about managing management plans. I'm sure you heard about strategic in-between companies and inner companies that are done to benefit so that you can kind of play with your taxes and how the companies are structured, where, like for example, the perfect example is an accountable plan, right? You can set up a company where you set up a sister or a parent company where you set up an accountable plan, and you can make some you can do some inner companies there that have some tax benefits. If you have the right structure, there could be an in-between company there where it can be taxed as a C-Corp, and you can see huge benefits doing it that way, even if it has more tax forms to file, even if there is some nuances around having to keep up with all the requirements for these other entities. You should, if you're in the right place, all of this could still be beneficial, even if we have all of those issues going on. Okay, so what do people must misunderstand about a C-Corp? Okay, so a C-Corp is usually a flat tax rate. Okay, so does that mean that it's the lowest? No, definitely does not mean that. Okay, this is another one where it's you have to run your numbers. Okay, although it does have a flat rate, usually around 21%, it does not mean that because the tax bracket of a personal can go up to 36. That doesn't mean that you just do that math and you just blindly say, okay, C-Corp works for me. Okay, there you go. It's less. But we're talking about the effective rate. Okay, so that's different from the actual rate that you pay. So there's some nuances there, and I know it can be complicated. But what the message here is that just because that you see that 21%. And when you look at your personal brackets are higher, it doesn't mean that that's the math that you have to do. Okay, there's some nuances that go to that. Okay, dividends do create a double taxation. So make sure that when I say double taxation, it means that the corporation is going to pay tax, the entity, and then you as a person, when you receive the dividends, you also pay taxes. That's different from the S-Corp where the S-Corp does not pay a penny of taxes. Everything runs through, gets passed through the individual. So that's why, so having an exit plan, know what you're getting into, it's what decides here which way you're gonna go. Okay, so we here at Upfront CPA, we don't recommend C-Corps lightly. It has to make sense. It doesn't mean that we have a lot of clients that do have C-Corp, but we do it for a reason. We run our numbers, we show the math. When it makes sense, we use it. When they fit, they fit extremely well. But it has to be done under the right circumstances. Okay? So, now that we have more details about all the entities, the next question is, that I get a lot, is how to choose. Okay? How do I choose my company? Okay, this is when we get new business formations, incorporations, this is the number one questions that we get, right? And it's usually like one of the number one drivers of our discovery calls or consultation calls, or people calling to get information. Okay, so usually I have kind of a list, okay, a framework that I put together where I ask certain questions to my clients to kind of get them to help me help you, right? And with this framework, we kind of start running some numbers, so some scenarios, and we kind of get to the final answer, which is what entity is going to help you not overpay taxes, stay compliant, avoid IRS issues, and kind of have that peace of mind, okay? And this is the following. Number one, current profit level, okay? And this is not your gross. This is not like, oh, if this happens, if that happens. No, it's the actual reasonable and realistic profit level. Stability of income. Okay, that's another one. Is it stable? Did you have contracts? Or is it, are you starting? Do you have a track record that proves, you're going to maintain? Obviously, we don't have a crystal clear. We don't know the future, right? It could change. We don't have a crystal ball, but we do have some reasonable expectations about the future of our companies. Okay, owner involvement. Are you involved in the company? Are you just an investor? Those are big ones. Payroll tolerance. Are you willing to do payroll? Are you open to payroll and distribution option? Growth in lifestyle of the business. Okay, so how are you looking to grow it? What type of business do you do? Is it a service? Are you selling goods? All those questions are important. And then the long-term exit plan. This is I leave this one to last because usually I leave this one to spend the last couple minutes talking to my client more in depth than maybe some of the other ones, which is what is your exit plan? And this gives me an idea for my next video, which is going to be your exit plan. This is very important. I always say that if you think about how you see this ending well, how you see the business, what you want to get to, where you want to get to the point of your business where you say, I'm done, it's going to drive a lot of the decisions that you make, including what election you're going to make, how it's going to be taxed. Okay? So it's not something that you want to do 2 years down the road. It's not something that you want to think about later. Right now is the time to make that decision and that you do it right. Okay? And that you do what makes sense now, projecting what is going to happen in the future. Okay? So now that we're talked so much about January and all this election talk, what are some of the common mistakes? Because now we talked about the good side of things. Now I want to get into a little bit of some of the mistakes that happen in January. So number one is the same thing that happens to taxes is waiting too late to ask. Okay, waiting till March to finally, what entity should have done. We talked about some of those deadlines, right? So waiting till the last minute, procrastination can actually cost you money. Okay, electing an S-Corp with no payroll. That's one of the biggest ones. Can't say how many people we have to deselect, just go back and redo because they selected an S-Corp with no payroll. That's a no-no. Copying friends and influencers. Okay, I can't tell you how many people say, I heard this in TikTok. My friend did this. The cousin of my cousin said that you can do this for me. It doesn't mean that there may not be some truth to that, but every case is different. No one has a silver bullet, one size fits all answers for these things. Okay, when it comes to taxes, it's very personal. It depends. Every situation is different, so you do not want to just take one of those free advice and honor them like that. Okay, ignoring deadlines. I don't think that applies to me. I'm sure I can go back and just sort of redo that later. Don't ignore deadlines, a big one. And assuming elections are auto renew without review. Okay, so some of them are. Some of them have to keep doing things yearly or quarterly or whatever timing, but some of them you do have to make certain you have to keep up renewing. For example, when you open up an LLC, there's an annual fee usually, whatever the state that you open, and usually they're different deadlines, right? So that one you do have to kind of keep maintaining yearly. So don't assume that everything is just once, that you pay once and you're done. Okay, most tax problems don't come from bad intentions. They just come from procrastination, from misinformation, and from just not kind of taking things seriously. So just think about, maybe if you think about it this way, that if you kind of take things seriously and you do things right, you're actually going to be paying, you're actually maybe saving money down the road. Okay, so now that we know this, I kind of wanted to add another section here, which is often ignored, and I wanted to talk a little bit more about this because it's important. And most CPAs or most people they all talk about the S-Corp and the C-Corp, but they don't talk about when you can go back and fix an election, okay? Because it happens. You're all happy, excited. You want to open up your LLC. You think you're ready to go. You kind of went through the hearing friends and influencers route, and someone said an S-Corp worked, so you're just gonna go for it. So that happens, right? It's natural. So now the question is, how can I fix this? When can I go back and fix if I did it wrong? Okay? So this is like a very important question. And right now in January is the time to go back and review it, because right now in January is a time when you can actually go back and do something about it. Okay? So usually when it comes to fixing things, like everything with the IRS, there's no guarantee. Right? You can put a request like late relief. You can send them, an explanation, usually to say that you meant no harm, that it was that you didn't know, but that there's no guarantee. Okay? So the answer is yes. Can I fix things? Sure. Sometimes you can, but you gotta make sure that you do it right. Okay? So let's talk about like each point, and let's start with how can I fix an S-Corp election? My first one, right? Like I said, I heard in YouTube this guy said an S-Corp, so I went ahead and did it. Okay, so the IRS has a late, so you can do what is called a late election relief. So this is exactly what the word says, is you get to relieve whatever mistake you did, right? Usually, like I said, with these IRS things, you have to offer up an explanation. It has to show that you're not doing it to avoid taxes. It just means that you didn't know, you were not aware, you did not do things right. And more importantly, for example, if the reason that you gave was that you took free advice from an influencer, is that now I have hired actual professional help to help me fix these things. Okay, so there's a very specific rule with the IRS, which is that lets you go back 3 years and 75 days. Okay, so, and this goes both ways. You can go ahead and actually go back and elect to be an S-Corp and go back 3 years, or you can go back and deselect for 3 years. So this is done under the IRS Revenue 2013/30. Okay, sorry, -30. So this is a very specific rule within the IRS that it allows you, within reason and for no ill intention, that it allows you to go back and get some relief because of everything that I just explained. So there are some requirements, as I mentioned, reasonable. You cannot be too because you just I did it on purpose, right? Don't do that. Consistent tax reporting as an S-Corp was already in place. So if let's say that you go back and you say, well, I'll go back 3 years and I'll fix that within the last 3 years, you have to have been working as an S-Corp, meaning you should have you would have had to have followed all the requirements to be an S-Corp to go back and be an S-Corp. What that means is, if you did not payroll 2 years ago, you cannot fix your corporation from 2 years ago. And obviously with that, you have to have done all your payroll filings, your payroll, your 941s, all the payroll forms should have done, and that you should have done your reasonable compensation. So this relief is extremely helpful, but it's not automatic, right? It's one of those you have to apply. You have to put the right reasons. You have to make sure that you follow talk the IRS language to make sure that you actually don't open up a can of worms and you actually hurt yourself down the road. Okay, these things need to be handled carefully. My advice is, if you have to fix something, if you need to contact the IRS, whether that's on a phone call, if you need to write them a letter, make sure you get proper representation for that. Okay, don't just kind of just get some random, or you just, out of the blue, get communications out to the IRS, because those can be helpful. Okay, so revoking, right? So we talked about electing. I mentioned that you can go back. So can I revoke an S-Corp? You absolutely can, but there's a caveat. Okay, so you cannot re-elect an S-Corp status for 5 years. Okay, so if you revoke it, make sure you do it right, and you do it for the right reasons, because you cannot do that again for the next 5 years. Okay, so make sure that you do it permanent. So basically, here what the IRS is looking to avoid is that for tax avoidance, you're choosing between elections every year, and usually that's not something the IRS will see. When you make all these decisions, you have a reason behind it. And it's something that is related to your business. And it's something that, at least within a reasonable time, is something that is expected to do, right? And then it's abuse, right? Usually these rules comes out of certain abuse that have happened in the past, as I mentioned, and it's why in this particular case you cannot re-elect an S-Corp status for 5 years. Okay, so you don't want to do this casually. If you're in, and you have to, or once you exit, the IRS expects consistency. Okay, so in consistency, like I said, it doesn't have to be that, that I have to have consistent income, I have to have consistent payroll. No, but the basis for your decision, there has to be some consistency there. Okay. Another thing I wanted to talk about was the C corporation elections, few do-overs. Okay. So once you filed when it comes to the C corporation, right? We talked about an S-Corp. So now let's talk about the C-Corp. Okay, when can I go back? When can I fix things in the case of a C-Corp? So usually the C-Corp is not that different from the S-Corp in terms of, generally speaking, sort of like high level how it works. But with the C-Corp, we talked about, filing the 832, the A832, which is the form to file the C corporate election, and changes are typically limited. Okay, so as it's separate from this S-Corp, the C-Corp, is kind of sort of limited in some of the things that you have to do, and it makes sense, right? Because the C-Corp is an actual, it's when you tell the IRS that you're separating the entities. Okay, it makes sense that if you're separating the entities, we talked about having investors, we talked about having projections where you're going to grow the company, we talked about paying dividends. To come out of that structure is very hard, right? It's very difficult to say, okay, I've had this for a long time, now I'm going to change to a completely different structure. I'm going to redo the payroll, I'm going to redo distributions, no longer dividends, I'm going to undo investors. Doesn't mean that it doesn't mean that it never happens. It does happen, but it has to be for the right reasons, and those situations, to be honest, is rare. Okay, but there's usually a waiting period. Again, 5 years. Okay, so you usually have to wait another 5 years before you can make another election. But but there's always relief. Yeah, right. So we talked about that it was different. It's very difficult, right? It's to change from one structure to the other is kind of extreme, right? But there are some relief. There is some things you could do, but you have to do them right. Okay. If you're expecting to move from a C-Corp to an S-Corp, it's not something that you do lightly. It's something that we definitely recommend that you look for a tax professional, a tax attorney, a CPA. This is some of the services that we offer here. At the very least, get proper representation and good advice how you're gonna do it. And it obviously requires a lot of upfront planning. You don't want to just test, right? Okay, I just want to do things and see if it lands. You want to think about why you're doing this and the tax impact that it's going to have for you and your company. Okay, so the last one is the disregarded entity. We already talked about how this is like a default entity. There's not something that you can elect. But the timing matters, right? If you open up an LLC in January and you choose to be, it's a default as a single member LLC or as a disregarded entity. You can choose to be an S-Corp. And there's some limitations. Are you able to go back to being to be a disregarded entity? There's some nuances there as to whether was it that you defaulted as a disregarded entity or you actually chose because you wanted to undo the disregarded entity election. So there's some room there that you have to work with certain information that you have to provide to make sure that you're following the guidelines. For that type of selection. So, it obviously gives you flexibility early on. January is the time to, make sure that you're, as I mentioned to you throughout this whole video, make sure this time before the end of January, just think it through, talk to your accountant, ask them this question: do I have the right election for my company? It's going to cost you nothing, and actually might cost you headaches later. Speaking of headaches, let's talk about what we cannot fix later. So it's the time to do it. If we don't do it, we're done. Can't do it. So number one, miss payrolls. Okay? So if you miss a payroll, for example, you have an S-Corp, you don't do payroll, you cannot go back and do a as of date of payroll. That doesn't work. So S-Corp, please do payrolls. You cannot miss the payroll filings. Okay. Improper reasonable compensation. If you don't follow in the right type of compensation, you cannot go back and do it. Okay. So January is the time. Okay. It's the time to think about that election as it pertains to, did I do this or not? Okay. Incorrect filings over multiple years. Did I choose the right or the wrong elections or the right filings for my companies? Inconsistent tax reporting. You cannot fix that. Elections made without understanding income thresholds. So, what did I make the decision based on my income? Now I don't make the necessary income to make this election. Can I fix it? So there are many of these things that you gotta make sure that you do it right. Otherwise, you're gonna be stuck in a very, very bad situation. So, folks, I hope that I have provided you with a lot of details. I know there's a lot to go through. There's a lot of information I provided, but basically, what I wanted you to get to think about was the timing of January. Right now is the right time to make the right election. To think about this particular topic as it pertains to your company, to your future, to your business. And one point that I want to make clear is, if you don't have the type of relationship with your tax person, whether that is your CPA, an attorney, whether it's your tax preparer, to kind of talk through these things, I recommend that you seek assistance for this. Here at Upfront CPA, we're the type of firm that we make long-term relationships. We get to know the clients so we can help them throughout this to make the right decisions. Okay, we try to be a proactive company, not a reactive where you just come to them and after the time has passed, then you start throwing ideas. My point is make your election, talk to your CPA. The IRS allows for corrections. There's relief. There's things you can do, but you have to do them right. Okay, follow the right guidance. Talk to the right people. File the correct forms, and you should be in good hands. You'll be allowed to. Usually, any errors, you've talked to the IRS, they're pretty flexible at assisting when there are errors that happen because of human nature, right? We're not all tax professionals, and usually we come a little bit late to get good assistance. So there is light at the end of the tunnel, and there's if you hire the right professional, they can definitely help you with this situation. So we talked about a lot about deadlines. We talked about January. We talked about company elections. As I mentioned earlier, I hope this video helps. If you like what I talked about, please follow us, hit the like button, and stay tuned because we will provide a lot more information like this. Thank you for being part of my discussion today, and I hope to see you again soon.